Let's go ahead and jump into why so many people where you live would want to hear from you about investing their money in your real estate deals. Inflation has been eating into the retirement savings of Americans. The piggy banks simply don't produce enough cash flow to keep up the pace with inflation. If you look closely at the increases in cost of living, you realize how much less some money you had even 10 years ago buys today. Now take our favorite real estate, for example. Even after recent adjustments due to market downturns, it's still 20 to 30% higher on average around the country than it was 10 years ago. Groceries, medical, dental services, professional services such as attorneys, accountants, plumbers, electricians, home improvement costs, all these categories have seen 30 to 40% cost hikes compared to where they were 10 years ago. Our seniors are facing a major struggle with the cost of prescription medication, and this is serious stuff. In 2010, the Agency for Healthcare Research and Quality published data that between the years of 2000 and 2009, that's a decade, the cost of prescription medication has increased on average 3.6% per year. And in 10 years, it's 40% increase. Now, because of declines in states' revenue, the states now cut a lot of social programs, including medication funding for seniors. Did you know that 12% of our seniors already can no longer afford prescription medications at all? And this is from Kaiser Family Foundation Health Tracking Poll in December 2009. Now take a look at this article in the Boston Globe. This is recent, by the way. Some people have $793 copay on their medication. They're selling everything they got in the house to be able to pay for prescription drugs. In Massachusetts alone, where state cut the funding for prescription subsidies, 44,000 seniors were affected by this. They're talking about some seniors simply leaving their prescriptions on the pharmacy counter rather than paying a price they feel they can't afford. Some of them now cutting their pills in half or taking their pills every other day instead of taking them every day they're supposed to. Now, what does it all have to do with you, your real estate business, or private money? Great deal. Now, here in America, the traditional thinking always has been that we could earn on average a return of about 10% per year in the stock market, and that's over a long period of time. And this would well outperform the inflation. Even if it was at 2 or 3%, it would then perform increases in cost of living and allow us to continue to live well on our savings. Well, in the last decade was the economic changes and the globalization of the world markets. This simply has not been true. Now take a close look at what happened to long-term retirement savings of people who had their money invested in the stock market for the last 11 years. Absolutely nothing. They're still at the same level as they were in 1999. That's 11 years ago. You see, Americans lost 11 years of their retirement savings time due to Wall Street's inability to deliver steady growth returns. Because our money didn't grow at all during this decade, now we can't offset the increases in cost of living. And it's a major problem not only for the retirees, but also for people who are right now saving money for their future retirement.